Alright, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I'm bringing you in for a long-awaited portfolio review. I've been gone for about a month or so here between doing work projects, traveling, getting really sick. I haven't really been able to film, but I'm finally feeling a little bit better. I'm sorry my voice is a little bit off, but I am just getting over the virus that's been going around the planet for the past couple years. So I wanted to bring you guys in and show you how things have kind of been going for the portfolio. It's been about a month since I filmed a video, so we're going to dive in here and take a look. Now this, if you're new to the channel, is the Dividend Doggo Portfolio. This is a taxable brokerage account that was started in 2019 in August, and it has been going up, and I took some money out of the portfolio in June, and then I've just kind of been adding back to it with dividends, and that's kind of how it goes so far. So let's break down by every sector so you can see. This is the all-time view. Total gain, we're at about $189,000. 133,000 of that is market gain, and 56,000 is dividends, and that is in just over 3 years, so that's pretty phenomenal. So let's go in and let's look at each category here. We'll start with the consumer setup, and let's see what this pie has. This has Altria, Home Depot, Coca-Cola, Costco, Lowe's, Target, and Pepsi. You can see their all-time numbers right here. And since this normally would be a weekly review, I'm going to give you that weekly glimpse and show you what the portfolio looked like for the consumer pie in 1 week. So this week it was up significantly in the green, just under $8,000 in the green for the consumer pie. And you can see like Home Depot was up about 8%, Coca-Cola up 8%, Lowe's at about 9%, Costco up about 7%, Target and Pepsi in the 5% range, and Altria Group at 4%. So you can see the breakdown of how the portfolio went up for the week. It's pretty staggering. It was a great green week. I hope that everyone had gotten in their buys the past couple weeks where it was really down and in the red. So overall, that is how the consumer pie is looking right now. Coma Money, which is in second place, this is basically where all the money would be routed if I was to have something happen to me. You can see I have the auto invest turned on, so when it collects $6,000 worth of dividends, it would do a buy, and the majority of that money would be into SCHD, which is a dividend ETF that is absolutely my favorite of the current ETFs outside of just SPY. So a large chunk of our 401k money is in SPY and the total market equivalent funds. So I've been investing heavily into SCHD over the past year, which has been absolutely phenomenal. You can see that 1 week it was up about $7,000, with Berkshire Hathaway being up about $800. This is a non-dividend paying stock. However, I absolutely love having it and watching it grow. So I'm just kind of going to add to that for a few years until I actually need dividends. And then I might consider transitioning that over, the Berkshire Hathaway, that is. So that is 1 week, and if I look at all time, you can see that it is slightly, just barely still down for SHD from all time for me. The total market gains are about negative $3,779 total, but the earned dividends are about $3,700 and climbing. So hopefully this will keep going up in the market gain. I'm not really that worried about it. I'm more or less just investing to see the dividends grow from here. Have about 20 plus years to traditional retirement, so it's quite a ways away, and I've got quite a runway there to build. So let's go into the finance pie, which was up about 4% for the week. You can see Citigroup has the largest position in this, followed by JP Morgan, Bank of America, Bank of OZK, and T. Rowe Price. I apologize for the dogs barking. There are 3 hellhounds down there right now. 2 of them just had surgery a little over a week ago and got neutered. So it's been fun to try to keep cones on their heads for the past couple weeks. So overall, the finance sector was up pretty significantly for the week. And I'll let you see, this is the all-time view. The only one not in the green is Citigroup, which is still down about $3,000 there. Overall, that's not too bad, considering how rocky the market has been and choppy it's been for the past couple months. So let's go back out and look at the healthcare sector here. This is AbbVie and Johnson & Johnson. Now you can see all time, AbbVie had significant returns. This is one of the stocks that I sold off some in June, and I took out my initial investment to go into a real estate project, and that was done several months ago. This is significantly high in the gains. I went ahead and took gains from this and from VST, which is coming up here shortly. They are absolutely phenomenal. AbbVie was a huge win for the portfolio. They just gave a raise of just under 5%, which is pretty phenomenal, considering what the cost basis for this stock was. I'm absolutely loving having this being where it's at right now. I might add to it a little bit more in the future. We'll see how 2023 pans out and what their revenues look like with the Humira sales going down. Johnson & Johnson has just been chugging along there. Had a great week, up 3.65%, which is pretty phenomenal for J&J. Now we get to utilities. This is where we have Vistra and Duke. Vistra, if I look at all-time highs, this is still at a gain of about $50,000. Overall, the stock was really, really high. It went up way quicker than I thought it was going to. When I look at this, it went up into the like $27 range, and I sold right around that. My cost basis was around 18, so this was, I had about 6,000 shares, and I took out the majority of the money that I had used to buy the position initially. And right now it's sitting at just under $23 a share, which is still really solid, and it pays a very solid dividend. I'm expecting to see some interesting info. They have some information coming up, so I'm very curious what their earnings is going to look like. I definitely am happy that I took the gains when I did from this position. And Duke is just chugged along the whole time. I've had Duke for a long time in this portfolio. I think since the beginning of the portfolio, actually. I think I first started, Duke was in the portfolio literally on August 6th. It had $200 in that position, and I have just added to it, and it is just climbed. It's come down a little bit, and it's going right back up. So overall, it's still above the cost basis, and it's a solid dividend at 4.3% if you were to buy it today. But overall, I'm just kind of holding that position right now, collecting the dividends, and then re-adding them into other positions. Now, monthly dividend stocks, this is really only one position here. This is BST, and then the owner's rewards pie. This will eventually go away come mid-November. They are changing that system where you no longer need to hold fractional shares of the stocks to get the benefits and the perks for the credit card. So that will be going away here very shortly, and I'm just going to roll that money, that like $600, into another position, likely just right into SCHD. However, BST is my one monthly paying stock. It is down pretty significantly. If I look at it over the past like year to date, it's been all over the place, up and down and up and down, and it's just kind of on a roller coaster. The past couple months with the tech sell-offs, it went up and down, and I have added a little bit to this position. However, it's just one of those that I am slowly adding to over time. I do still like this position, and the one hesitation with this is it does have a very high expense ratio, but it is my one monthly paying stock right now. I may get back into REITs a little bit over the next year. We'll see how that kind of goes. For right now, I'm just kind of adding to this position very slowly. It is dripping right around 1 share every single, it's over 1 share now, every single month that I will buy with this position. So I'm just kind of going to keep building that up, a couple shares every month, and continue from there. So overall, that is kind of where the Dividend Doggo portfolio is. You can see it's had a great week. It's been a crazy month. If I zoom out, the month of October has been absolutely wild. We dipped down below 500,000, and now we're all the way climbing back up toward 550,000. We have earned, this is earned dividend income for the past month and a half or so. I basically have just been holding the dividends that I've been collecting. So this $2,034.24, this is all dividend income that's going to roll back into the portfolio. Likely going to just add more SCHD to kind of close out the year. I'd like to get another $10,000-$20,000 into SCHD before the end of the year. And I'm hopefully going to be able to complete that with some projects closing and wrapping up this month for November. And then we have finally settled out our tax bill, which has definitely been a hindrance and stressor for me. So hopefully all of y'all are doing well, and I will hopefully be back at you very soon here with another video. I'm going to try to do a total dividends video for October and have that out by midweek, hopefully this week. So I'm going to try to get back into the swing of getting you a weekly video out and showing you what I've been doing with the portfolio here every single week, and so that you can kind of see how the portfolio has been going. Now, the one thing I did want to show here is I have several accounts in here. I have 2 custodial IRAs and then a traditional IRA that is sitting right at around $14,000. This has had significant losses due to the BABA play that I did in 2021. And I did sell that and just rotated over to ABR and SCHD. ABR has gone down significantly since I bought it, but SCHD is slowly climbing up. So I'm going to be likely adding a little bit more to this over the course of the next couple months, and likely just going to be adding and tanking more money into these 2 stocks here. So I just want to give you that little brief update so you can see we're at a little over $550,000 invested in M1 Finance. I currently am still kind of looking at transferring off of M1 Finance, but we'll see kind of how that goes in the near future. Drop me a comment below, let me know how your month has been, and I've got a lot of regulars that I miss chatting with, and I hope that your portfolios are doing well and that you've been socking away money over the past month and buying stocks. Let me know what you're buying this week, if you're taking advantage of any of the flash sales with Meta and Amazon going crazy. Let me know what you're up to, and I'm looking forward to getting back in touch with many of you, and thank you for watching this video. Have a great weekend.